Trading isn't easy. You learn that lesson pretty quickly. But guess what? Success is a lonely road. Success in anything worth having is tough. The only difference with trading is that we spend too long being sold the dream. We focus on the dream rather than trying to understand the reality. So let's remind ourselves. Trading isn't something you're going to become profitable with overnight. It takes hard work, dedication, and perseverance. Ignore the snake oil salesman telling you of get-rich-quick, holy grail, press score, and profit systems. They don't exist. It's a false dawn. Sorry to burst your bubble, but I told you, we're focusing on the reality now. So what makes a great trader? Someone who has grit and determination. Someone who focuses on the long term and isn't constantly searching for short-term wins. Make sure you keep your eyes on the long term and not the short-term wins. After all, this is a marathon, not a sprint. But most of all, beyond anything else, don't lose your enthusiasm and don't give up. Your story starts here. Stay dedicated. This is just the beginning.
All right, we should be good to go now. Should be up and running now. There we go. There we go. All right, we got Bill in the building. We got Melvin, Ruben. What's up, guys? Anyway, I can put this chat. Pop out chat. Ah, there we go. Noemi, Benji, Seb, what's up? What's up, Lisa? All right, guys. So as you can see, we've had some very eventful price action to kind of start us off. Right now, for NAS, we saw a really crazy spike. I mean, this was, my God, 260 points. I mean, the market's just been insane. You know, last couple days, ending the week, we ended up rallying to all-time highs, and we've just completely blown that out of the water over the weekend close, as we can see with the way that we've kind of opened up. So yeah, man, I don't know. There's a lot of money flooding into the indices markets for sure. Personally, I'm not a fan of trading Sundays. However, obviously, when we have these big spikes, that presents a unique opportunity to catch a very strong sell-off here. Personally, from what I've seen, whenever we do have these type of Sunday sell-off days, typically price likes to do this thing where it'll like have that really big candle that pops up, and it'll have that first like kind of sign that it wants to like fall off, and it'll probably drop to like here, like right where the fair value gap kind of starts, and then I actually expect it to kind of like pop up and take this high from this spike. And then basically, if we're going to end up getting a sell-off, it would kind of be something like this. So I'd actually want to see price basically like take out this low and then pop up and take out the high from this spike and then go for the shorts, personally. So if we can take off the high here and see like a strong rejection, maybe shorting something like that would be the move. That's how I would play this if you want to try to catch like a Sunday, you know, quick gap fill type of trade. Again, I'm not really a fan of trading like that most times, of course. But, you know, whenever we have a 260 point move, I mean, that's pretty strong. To give you an idea, shorting somewhere around the high over here, even with a 50 point stop to get us back down to the week open gap would be a 5-1. To give you some context of what that would look like. So again, just kind of letting price pop up above this spike and then seeing that rejection, you know, with a 50 point stop, that takes us to over a 5-1. So that's a potential opportunity for a Sunday night that we could potentially see here with NAS. Again, I'm not a fan of trading like that as like a standard, but if there's enough of a move where I think it makes sense, like there's no way that we're gonna have this big of a spike and we're not gonna come and fill all of this. It's just a matter of when, you know. And I think that like this move you're seeing right now, oh my God, you have no idea how many people are ready to chase that. Like so heavy right now. Because everybody's thinking the same thing. Oh my God, price just spiked up. Let's wait for it to slow down. Oh look, it's slowing down. Promise you, like as soon as, well, it already took out this flat bottom candle, but I feel like if we even take off this low right here, you will see price definitely from now to this little zone right here, take that and basically rally back up. I don't know, I've seen this happen many times on Sundays. This is just an observation, but I really feel like that's probably what's gonna happen here. Obviously, if you guys, you know, what's it called, have more experience and you want to make your own judgment call, then of course I always encourage you guys to make your own calls. But I mean, this is what I would do. I have traded on Sundays in these specific situations. But I do want to see a fake out first. I want to see a high get taken from this original spike that we got at market open. And then, and only then, if we grab that liquidity from there and we get a really strong rejection below, then I'd like to really execute something like that and try to, you know, snag at least a 2-to-1 plus trade. But 50-point stop loss above this high is, it seems pretty reasonable, especially that we're very far extended away from price. And let's not forget, I mean, we even had this CPI candle from Friday, or not CPI. What was this news that we had on Friday? Oh yeah, it was CPI. Well, and it was PMI as well. That's why I was kind of like, wait, hold on. But yeah, this news right here from Friday. We kind of filled some of that move, but I feel like we still had some more to do there. So I don't know. I feel like the market at some point is gonna be due for a really big dump off, but we'll see. I will say though, for sure, like towards the last 2 days of the week, I could have, like, if we would have had a what's it called, a buyer's bias, I would have been able to definitely catch some more nice trades to end the week strong. I mean, it was like a whatever week. Like we went 2-1, and the 2 winners that we had like one that I closed a little bit early, which kind of sucked. It was the sell-off from here on Wednesday. Yeah, on Wednesday. We had a 10 a.m. like candle flip play that we were calling out live on the session here, and what's it called? It was like around here. Yeah, it was literally just like that, and then I ended up exiting like here at Asia low. I ended up like closing 2-to-1 more or less, like right here, and it was crazy because price actually ended up like spiking back up with this wick and went back above entry and then dipped again. So like in the moment it was like, okay, cool, I made my 2%, you know, price came back up to entry, like it was a good idea. But obviously in hindsight, you know, this thing ended up melting for like a huge risk to reward trade. It was like a 15-to-1 plus trade. So I ended up definitely missing out on squeezing a lot more out of that trade, but that was basically like the best entry I had. All the other entries like hit for like almost a 2-to-1 and reversed, and then we had a loss to end the week. Yeah, that was basically it. A lot of the movement as well, like from Friday, this happened during my before my window. I usually trade after 9:30. CPI busted price up about, you know, a couple hundred points before I even entered into the market, and I was looking for a reversal. Price ended up like coming down a little bit in profit, and then it ended up taking me out. Stop loss here, sat around the rest of the day, and it was a pretty midday as far as like post 9:30 trading goes. So yeah, that was kind of like a quick recap. Honestly, it was just this one day here selling was really good. I just didn't squeeze more out of the move, and then all the other days was either like this was a weird rough consolidation day where I didn't really catch much, and then here I just had the wrong bias for the day for sure. So yeah, it was kind of whatever. So this week looking to hit it hard for sure, and maybe it starts with this exact trade. So let's see. So we just got the manipulation of this low right here. So I do expect price to buy up from here now. And basically looking to take this high. Now, once that happens, so I'm pretty confident we should see that. Then later the sell-off. So that's kind of the idea. But I've just seen this so many times, man. I've seen this play so many times, literally. Where you have this spike, you have this low that forms, people jump into this sell very early, and then you get this massive reaction. Then people think we're breaking out again, and then it dips off. Like, I literally have seen this play. I don't know why. It just happens when we have these Sunday spikes, like clockwork. Like, literally everything I just told you guys is happening, like, exactly like I said. So again, I'm not saying to necessarily buy. I'm just saying if you were to, like, let's say take the buy from here with a 30-point stop, this is kind of how the position would look like. I don't think that is nearly the best trade idea to really go for, but nonetheless, why the heck is this? Look at this, bro. Look at this. What is this? We got Halloween stuff going on. It's crazy. Yeah, I've just seen this textbook liquidity grabbing 101 on these Sunday moves. But the better trade, personally for me, is to wait for that high to get swept, a rejection, because the whole point is we want to try to catch the majority of this massive inefficiency from market open. So, but let me see what's up with the chat. Maybe you guys ended up taking something or. Yeah, I made out going against the trend. No, I definitely went against the trend the last 2 days of the week. I don't know. I just didn't have that bias, and I just kept seeing it go up and up. I'm like, yup, I'm getting cooked. Um, do you think it could be in Asia, London, or New York? It might actually start during Asia. You know, I don't know. You know, it just really depends. I just know the order of events. Like, literally, if you go back to this recording, we take this low, we expect a rejection to take the high, and then we wait for a exhaustion to go and then drop off. Very, very typical pattern there that we see on these Sunday spikes. So, you know, again, usually for my strategy, obviously we wait for London session to pass after Asia forms, and then we have a high and low as our reference points with the strategy that I teach. But when you talk about gap trading and all these things, like, I don't want to call it gimmicky, but a lot of people treat it like that, you know, like a lot of people trade these scenarios, and to be honest, I feel like these are just like finesse trades or like gambler trades, if that makes sense. Like, for me, like, consistency is gonna come from having a repeatable process when market conditions make sense and we understand that the game is being played. So like post 9:30 indices, looking at session liquidity like Asia, looking at manipulation, fair value gaps, all of those things, like, that's our bread and butter. That's what we wait for. That's what we trade. But then there's unique opportunities like trading during news. You just literally like pick a side, go full margin, catch a bag, you know, like, that's gambling, you know, but people do it. You know, so I'm not gonna say you can't do that. I'm not saying you can't take these type of trades, but they are risky. They're not system based. They're not something that you want to develop a consistent edge around, because, you know, like, you don't even get these type of things that happen every Sunday. If you told me every single Sunday we would get a massive spike like this, then of course we would want to probably create a system to take advantage of that, because it's like a repeatable thing that happens, and we can, you know, look to make it part of our plan, whatever. But this doesn't happen all the time, you know. So we can finesse it when we can, don't get me wrong. Like, for example, if you were to take this with a 30-point stop, you'd be up almost a 1-to-1. You could go almost break even at this point and just have a fun trade that maybe you risk a little bit on and make something out of it. But again, I wouldn't want to get into the habit of taking like these, I would say like kind of like silly trades. I'm not saying they're not bad trades, but you got to understand like these type of scenarios, you probably want to go less risk. Maybe you have a separate account that's not like your main thing when you try to take these type of things. Just because again, it's not our A+ studied, back tested, you know, like actual planned out setups. Or I hate when I click stuff by accident. By the way, I don't know if you guys always tap in to the YouTube lives, but usually I do it on like YouTube Zoom. And I feel like the quality was kind of bad, but I did it on OBS today, so hopefully the quality is a lot better. I'm gonna compare it today after, and we'll see. All right, let me check the chat here. Gotta be a better way to check this chat, honestly. I feel like this is kind of like weird. Could you talk a little bit about backtesting and how to use it correctly? What should we pay attention to? Okay. All right. So, quick question for the chat here. Who actually backtests? Or like if you don't backtest, just be like, oh, I don't backtest. And I mean, there's some people that purposefully don't backtest because they're against it, and I can talk on why maybe some people feel that way, but I'm kind of curious if you guys have that habit of backtesting or not. What happened to my chat here? Me, I think many people skip backtesting because they don't know how it works. I do. Okay. So here's what I'll say about backtesting. Okay. So what is the point of backtesting? For me, it's to, number one, test a potential edge / strategy. Okay. And number two is to refine your edge. It's one of the two. It's either you're testing or you're trying to refine. Now, personally, like I don't have to backtest like my strategy anymore. But I will tell you where I started backtesting something else so you can have an idea, right? So when you first start something, like a strategy that you're planning to do, whether it's support and resistance, trend lines, Fibonacci, liquidity sweeps, fair value gaps, inverse fair value gaps. You use a million indicators like RSI, Bollinger Bands, this, that, and the third. Like, I'm never gonna tell people that they have to trade like me, but I will say that my way of trading, at least as far as understanding the concepts of session-based liquidity, fair value gaps, and that type of stuff, is very undeniable. I mean, literally on stream, I'm like, yo, we're gonna take this low and get a reaction to the high. And you're gonna see it literally happen like in full, most likely. So, like, this is very intentional. This is not like this has a very specific purpose of engineering fake outs that go against majority psychology. Because remember, people are seeing a spike, then they see price slow down, and then they see this as the first break of structure. So that's like the sign to get in for sells, which is the best time for market makers to buy because everybody's jumping into the sells to fill in the gap. So it's a matter of understanding that mindset of like observe the masses and do the opposite. And sometimes people hear that and it kind of like becomes this like corny thing to say when you just want to sound like you're smarter than everybody else. And that's not the point of it. Like, that's why I'm very careful of like why I say things and like, you know, it's not like a ego thing or like a, oh, I'm smarter than everybody, I'm gonna do the opposite of what they do. It's like, no, it's just understand that that's how money's generated in this space, you know. It requires a lot of people to basically think one way, and for people that have control over price to swing it the other way, you know. And sometimes the way that mass majority of people think in certain situations plays out, but it plays out like for a short time, and then it ends up like that position ends up falling apart completely later. So I try to put myself in that state of mind of like understanding liquidity and fake outs and manipulation, because it's very obvious that it happens in the market. So it's just like, okay, if it's obvious that it happens in the market, how can I spot it, see it coming, or it happens and I'm jumping into it with the market makers? You know what I'm saying? Like that's the goal for me, because you're always gonna be riding a very easy current or wave, because you're riding with the people that run the business, you know, and the people that run the business manipulate positions. So I say that to say, like, whatever way you trade, though, I gave you my perspective of what I look for, right? But you might think differently. You need to backtest if you're gonna try to test something. Because here's the thing: the biggest mistake people make, I should say, the biggest mistake beginners make, is spending money without proof that they even have an edge. Okay? If you're getting into trading, like, if you don't have absolute proof that you have some type of edge, you're just gonna waste your money. Okay? Like, if you keep buying challenges, if you keep funding your personal accounts, if you keep doing that, without some type of game plan that you've like tested and tried on like a demo account at least for a while, you're just looking to give yourself, you're just gonna lose money. Lisa, I appreciate you so much for the super chat. You're the best. You've always been supporting. It was super cool seeing you in Atlanta. I look forward to seeing you at the next events. Thank you so much for the support always, 100%. I was told not to backtest because you can't feel the emotions. Okay, so exactly. I'm gonna get into all those great things. I'll get into all those great things. I really hope you guys are gonna pay attention to what I'm gonna say, because if you pay attention to it and you listen to me, it's gonna work out really well for you. If you don't, whatever. If you're gonna start trading, or you've been in trading and you have no proof that you have no type of edge, then you need to get back to back testing and developing a system and trying it on a demo forward testing. Okay, so I'm gonna talk about how that kind of flows, right? So don't spend money for no reason. And if you're gonna do that, can you at least minimize the damage? Like, do it for yourself, you know, like trade $50, $100, buy a 7.5K challenge or a 10K challenge. Like, stop trying to go for 200Ks, 100Ks, this, that, without having an edge that you can see works. Because I mean, I'm just saying it for you, like, you're just throwing away a lot of money, and it kind of hurts me to see people lose money that they don't have to lose, you know. You're gonna lose money. Like, it's not about not wanting to lose any money. Like, you're gonna have to, like, for you to make 5 figures, you need to lose 4 figures. For you to make 6 figures, you need to lose 5 figures. For you to make 7 figures, you need to lose 6 figures. So you'll kind of know your level based off of what type of losses you've had that you can bounce back from. Okay, the same thing if you have like an affiliate business like we do with Akashex, where if you think that people that hit a 6-figure a month income have never had like hundreds of people leave their organizations or business in like a span of a couple weeks, like, it's happened multiple times to them. Because if you gain thousands of people into your network, you're gonna lose hundreds at a time. Then you're gonna go up 1,000, lose 400. You know, like, you're gonna have these sways and pullbacks, and they're gonna get bigger and bigger the more money you make. But at the beginning, like, you need to not put yourself in a hole, because that's just gonna discourage you a lot. It might even put you in a bad financial position to invest into things like coaching, mentorship, resources, tools, more challenges that you should have actually spent smaller amounts. But you're just so focused on making like this really big payout that you just don't respect the game to start at a certain level and work your way up, you know. That's just the way it goes. Okay. Now let's talk about the back testing thing, right? So number one is you need to put, like, you're doing it to test a potential edge. Now all I can do is really talk about mine. Okay. Now, I don't usually do this on YouTube live, but you know, you guys asked and let's just do it. All right. But I'll run through like Liberty really fast, like super fast. And I'll explain to you like how I even came up with the strategy, right? So number one, I never take credit for being like this like genius that just invented the way I trade. Not at all. I've, you know, been in the game for 7 years and I've learned things from different people and I've tried to put them together. And ultimately I just kind of like learned a million things and then I took away like, you know, like 998,000% of it. You know, like I took a lot, I learned a lot, and then I minimized it as much as I could. Okay. And for me, the three main things that it just had to come down for me was obviously it had to be a profitable system. Okay, so for me, my definition of that was like, hey, I don't need to win majority of my trades. If I can win 50 to like 70%, and I give it that much of a sway because sometimes I have a higher win rate. Sometimes it dips off if I have the wrong bias for an extended period of time. It might even drop to like something like 40, but like that, you know, that sway of like 50 to 60 to 70% roughly around there. And then I'm looking at least close 2-to-1 RR minimums. All right. I already know if I can find a strategy or a system or something that can fit me into that, then that's like the first thing I want to focus on, right? The second thing is clarity, right? Like how realistic is it for me to spot opportunities I wouldn't say easily, but let's just say like how realistic is it for me to spot opportunity? You know, because sometimes we trade like let's even talk about some of the concepts I use, like fair value gaps or liquidity, whatever. Like sometimes people trade these type of concepts, but they have no clarity because they don't know which order block is good, which one's not. Which fair value gap is gonna get filled, which one's gonna turn into an inverse fair value gap. Like, you know what I'm saying? Like there's so many factors that create a lot of it creates a lot of like maybe it'll work out, or like it's just a lot of discretionary things. And I want to try to turn this into as mechanical of an approach as possible, right? So you're gonna have a little bit of discretion, but a lot of it is just gonna come from like rules. Okay, like for example, if you're like completely mechanical based, then you can develop a EA, you know, like some type of algorithm or robot or whatever, because you're just inputting rules and then it spits out those trades whenever those rules get met, and you program the thing to basically autopilot these trades, right? Now for me, I always say, because there's news, there's world events, like there's a lot of curveballs that the market does, even if it's just once in a while. And you know, algorithms and things like that can struggle in those situations. So I feel like at some point you want to have some discretion. All right. But again, for my system, I just want it to be obviously a profitable system where I can see I can win a good amount of times. My risk to rewards are there. I have clarity to actually spot them, because at the end of the day, you can backtest a strategy that like is profitable, but in real time, it's hard for you to actually like execute it or like spot it in time and actually, again, execute. Like how can you actually, like, can you actually realistically consistently execute what you're seeing when the trading view is on slow mode and you're literally picking and choosing your spots? You know what I'm saying? Like it has to be something you can like practically execute in real time. So that's the thing, you know, third, the clarity. And then the thing is consistent, you know, like, do I have something that's consistent, that is routine, right? Like I want to have a routine. So for me, like I love that I don't have to trade before 9:30. I know that after 9:30 is when my trades come. I know exactly what I'm looking for as far as Asia, boom, boom, boom. So these are the three things that I would want in my system. Obviously, something that is showing that it's profitable, but sometimes you can have things that show that it's profitable when you're back testing, but your ability to actually execute it in real time, it might be very difficult because maybe it's like a micro scalping strategy, or I don't know, you know, it just depends. And then the third thing is for me is like having something that's consistent or routine for me to like do it over and over and over. What I like about my strategy is that I don't have to trade every day, but opportunities do technically present themselves almost every day. I just need to be aligned with the right bias. And if the day is like one of those choppy, ugly days, those are the ones that I have to kind of like either not trade or just go lighter on risk, or at least just never go past my maximum loss and then just chill out and realize, oh, okay, today was a crappy day, no big deal, okay? So you might be asking like, damn bro, can you actually show me how to backtest? Because you still haven't talked about it. But the point of backtesting starts with why would you even do it, right? And that's why you would do it. You want to backtest because you're trying to get evidence that you can fit something into that mold. Now, for you, that mold may be a little bit different. Like maybe you don't care about routine. Like, oh, I'll trade Asia, London, and New York. I don't care. Like, I'm up all the time. I can be on the charts 24/7. I'm psychopath like that. Hey, like, there are people like that, and they make good money. And I just don't do that. But maybe that is you. So maybe you don't care about the consistency thing. You know, you're just crazy like that, then whatever. But obviously, the profitable thing has to be there. And then your ability to execute for sure needs to be there as well. So when you backtest, you gotta actually like, backtesting is just part of the solution. I'm on MT5 in 1 minute. NAS 100 here took the high already. How come? So you're saying that NAS took the high on the other broker? So here's one thing you guys gotta understand, man. When we trade, what's it called? Like CFDs. Okay, so like Forex trading, where you're trading on TradeLocker, MetaTrader, this, that, and the third. You are not going to have like the real price feed. And what I mean by that is that these are synthetic markets at the end of the day. Okay, meaning that you're gonna have days where like MetaTrader 5 or TradeLocker reports this price, a different broker reports this price, because they are synthetic markets that mimic the real futures market for NASDAQ. So like, for example, if I pull up like micro mini NASDAQ, or if I look at, you know, not mini, but like there's NQ, MNQ. So like these futures firm, like these futures charts are like the real data pricing. Okay, so when you trade futures, you'll have access to like real market data, right? When you trade CFDs, like, you know, Forex on MetaTrader, TradeLocker, this, that, and the third, you're having like a synthetic market that's like recreated, mimicking what's happening on that futures market. So that's why there's a discrepancy. Sometimes one takes the high and the other one doesn't, and that creates a divergence. So yes, that is not weird to me personally. That's just a standard of things that happen. So obviously at the end of the day, you have to kind of go with what your broker is showing, because that's where you're executing and where you're making your money, you know. But yeah, that's the reality of what happens when you trade synthetic markets via CFDs. Okay, so I'm gonna finish my thought on the backtesting stuff here, because that was a really good question. Okay, so to finish the thought on backtesting, right? So let's look at like, okay, how did I backtest my strategy, right? When I started looking at my strategy. So number one, my strategy, very simply put, is I look for the Asian range to form. We mark that out. Okay. High and low. And basically when I first created, like when I was first doing the strategy, I was only looking for breakouts. Okay, I was only looking for breakouts. So basically, and I wasn't even looking at like trading only New York session. Like at this point, I just wanted to like trade it whatever session. I just wanted to like do it. And I started with a 50-point stop loss. Okay, so the strategy went like this, where basically I can either use a pending order, or I can just be up And basically, if price starts to cross up out of Asia, I'm gonna go for buys. And so I would have a buy, I'd put a 50-point stop, I would target 4 to 1. Technically, I think I started at 3 to 1. Yeah, I was doing 3 to 1 when I first started. So I was doing 1500 or 5,000 ticks, 15,000 TP, 3 to 1, and I would just only go for breakouts, and that was it. So yeah, this was basically what I would do. And then what happened was, over time, I was like, okay, when I'm back testing, I want to see, number one, is it profitable? I'm like, okay, well, days like Friday, price breaks out of Asia and ends up actually skyrocketing, hits 3 to 1. Okay, cool. Then I started seeing like, okay, you know, does this work during London session? Does it work during New York session? So I'd go back on here and I'd basically look and I'd see, oh, okay, this moved during London on this day. So let me see on other days, how does it actually do? And so I'd go over here, mark up the day before. Okay. And I'd go and I'd look and I'd be like, okay, this day, price basically was a losing day because, again, I was only going for breakouts. So I'd take a breakout here, put a 50-point stop, and I'd say, hey guys, the market faked me out today. I took a loss, right? And then I'd say, okay, later in the day, even though we took this loss here, later in the day, price starts to cross up out of here, 50-point stop, and then basically a 3 to 1. And I say, oh, okay, cool. So price, you know, took me out with a stop loss here, and then we hit take profit here. You know, I lost 1% here, and I made 3% here. Okay, so, and this is what I would do every single day. And then I would look, okay, this trade that lost, when was it? Oh, it was at, this was at early New York session. And then this was at, yeah, like post 9:30. This was at 9:30. You know, so, and this is all I would do. So I would just look at, what's my strategy for, like, you have to know, like, what you're backtesting, right? So you have to know what's your criteria for entering, exiting, your stop loss size, or, you know, what dictates where your stop loss goes, if it's based on structure or a specific pip amount. What's your average risk to reward ratio? Like, you just use backtesting to just look at historical data to basically reinforce whether your strategy makes sense or not. And so that's how I started. It was just breakouts. It was either London or New York. And I would target 3 to 1 risk to reward ratio with 50-point stops. Then after I started backtesting over time, I started realizing that, like, okay, you know, sometimes we have like these weeks where I get a bunch of reversals. Like, I keep getting stopped out because price is breaking out and then turning around. And that's when I started teaching the reversal models, where, you know, like, oh, price, you know, pops up above, like, for example, on this day, right, where price broke out, below this low, ends up coming back into the range, right? So back then I'd be like, oh man, we missed the sell here, maybe let's go for the sell again, right? And things like that. So I was just like, okay, let me figure out a system now where instead of only going for breakouts and being one-dimensional, like, how can I take advantage of the conditions where I actually expect price to reverse from these points, and then look for like how to actually call those reversals situations instead of the breakout situations. Okay, so it's that's how I would refine my edge. So first it's like testing if your edge works, and then once you see that it works, you're like, okay, how can I make it better? And you start picking up on details. The last thing that I started doing lately was like the 10 a.m. open, where like once 10 a.m. hits in the market, I want to see like how price reacts at 10 a.m. to basically know whether we're gonna go bullish or bearish from 10 to 2. So that's what I've been backtesting lately. Not so much my strategy, because I've been doing the same strategy for so long already that like I kind of know. But the 10 a.m. stuff I've been backtesting a little bit more lately. So I know this is very long-winded, but like this is the process of why and how you backtest. Okay. Now, backtesting, like I saw somebody in the comments earlier, they said, I was told not to backtest because you can't feel the emotions. So I think that it's a mix of doing both. So once you backtest, again, you don't need to backtest that much. You're just trying to find your system with that. But once you find the system you think works, then you need to forward test. Okay, so backtesting, all right, is trading view, replay mode, right? And you're basically, looking for what your strategy looks like, how has it been performing, like things like that. But then after, you have to do forward testing, right? And forward testing is like live executing either on demo or small funds to test your ability to execute what you have been backtesting. Okay. So again, even if you do a demo account, some people are gonna say, oh, but demo is not something you should do because you don't feel the emotions. Only you really know. Okay, like some people take their demo accounts very seriously, some people don't. The people that talk about like not taking backtesting serious, or the people that talk about not trading a demo account serious, like I understand the detachment because there's no money involved, but I'm gonna tell you something that might change your perspective though. If somebody wants to become a airplane mechanic or a pilot, right? If you want to become a pilot, dude, you have to do the simulators first, right? You have to do the simulators first. And if you don't take the simulator serious, you think they're ever gonna put you in a real cockpit? No, because there's real people's lives at risk. If you were trading somebody else's like $1 million cash, and that money mattered a lot to them, and like they had a gun to their head and they're like, hey, you need to make this person become a great trader to manage your money, you have no choice. Dude, that person is gonna make you demo, they're gonna make you study, they're gonna make you backtest, they're gonna literally make you go through hula hoops 1,000,000 times before they ever let you touch their money. The thing is, like, we don't respect our own money sometimes, even though we think we do. Or like, I don't know, like if you can't take backtesting serious or a demo account serious, I don't know if you'll take live trading serious, man. I'm not gonna lie. Like some people can, and at some point you can graduate from demos. I'm not saying you need to demo, but if you have no idea what you're doing, or you don't have a system built at all, and you go to try to trade live, like I would bet a lot of money that you're gonna blow your account. Like the statistics are highly against you. Again, it's not everybody. There's always gonna be that one person that's just like an alien, and they just like they're just balls to the wall crazy, and they just make this thing happen with no fear. Like there's just people like that. I'm not gonna sit here and say it's not possible at all, but almost every single person that tries that approach, you're gonna fail. So take backtesting serious with the intention to like not just mindlessly scroll and look at candles going up and down. Like do it with intention, because you're like, yo, like I can change my life with this type of income. But it starts with the little disciplines of like building a consistent strategy, seeing what that looks like when there's no pressure on the table. And once you feel like you're bored, or you like already get it, like you already know what to do, okay, that's how you know you don't need to backtest no more. But until you get to that point yourself, don't discredit backtesting. Like do it first to inspire yourself to see your strategy work and that it can actually be profitable. And once you've done that for a while and you get bored of that, then you'll know it's time to like go and actually put your money where your mouth is. Like, go try a small funded account, go try a small, small capital, and go forward test what you've back tested. Like, go start executing what you practice and see how that goes. And then once you see that you've forward tested these things and it's been going well for a while, then you can start to scale more capital into the accounts. You can go for bigger prop firms or more prop firm challenge accounts that you link together, however you want to do that. But this is the progression. This is like the evolution of how you trade. You know, back testing, build a system, test the system, forward test the system, scale, scale, scale. If you go through that motion, then you're doing things correctly. Okay, so that's it. That's my rant on backtesting, but it was a great question that we don't really, cover a lot. But if you look at it like that, like that's how you treat this like a business, like that's how you treat this with intention and a plan. How many months or years should we backtest? I mean, at the end of the day, like, the strategy needs to be able to perform for a long period of time. If your strategy can't perform over an extended period of time, like, I don't think you really have a good strategy. So yeah, at least, I mean, definitely months. It can't be just like a couple of days or weeks. You definitely want to see it for a while. All right. But yeah, guys, I mean, basically we gave you guys the game plan for NAS. Again, personally, I don't chase these type of trades. This thing could fall to hell right now, and if I miss it, whatever. I just know, like, from what I've seen on these type of scenarios, and I'm not really gonna go right now and dig through, I don't know how many Sundays ago the last time I saw this, but if you feel like doing it, go for it. I don't feel like doing that right now, I'm not gonna lie. But you can go to a Sunday, maybe like weeks ago or months ago, and you'll probably find like the last time that price spiked up like this, like really aggressively on a Friday, or I'm sorry, on a Sunday open. And when you do that, personally, I feel like what you should find is that first candle that spikes, you'll usually see like a strong retracement, and then price grabs that high, and then usually gives a drop off. Okay, so you can go test that and see that if you want, but that's what I've seen, and so that's what I'll stick to. So again, it might look like it's dropping now, and if it does, I'm whatever about it. Like, I'm gonna stick to my strategy and trade all week regardless. But personally, what I would like to do to participate in this is to see this take the high, maybe even runs a little bit more, I don't know, but eventually then we start to see the shift of structures happen, and then we can look to fill somewhere in here with sells. That's what I want to see, and that's the only trade I plan to take so far. All right, so I'm gonna leave y'all with that. So yeah, guys, tomorrow we have our first live session on Akashics in Spanish. So I'll be streaming in Spanish at 11 a.m. Eastern, and then Tuesday, Wednesday, Thursday, I will be streaming in English. Here's my sessions right here. So 11 a.m. Eastern on Monday, Spanish, and then 10 a.m. Tuesday, Wednesday, Thursday. Also, I put a Google form link on my social medias. I'll post it on some of my other stuff there. It's just like some questionnaires that maybe you guys would fill out, and maybe there's some type of value that I can add to you via that thing. Honestly, most of it though is for people that are like not involved in Akashics at all to get started. So obviously if you're already in Akashics, most of that's not going to correspond to you anyways, but nonetheless, you guys could check that out just in case. But yeah, other than that, guys, I'm gonna see you on the sessions. Also, last thing, if you guys are in Akashics, we have huge announcements coming in like the next 3 days. And like, I know we kind of tossed that around. Not like we, like when we say something's a big deal, like it is, but this is like the biggest thing that we've ever announced. Like, not even kidding, like this actually affects every single one of you who's an active member. So please make sure that you guys are very attentive to what's going on with the platform over the next several days. I think I posted, yeah, here. So this is the link to register for the webinar on the 29th. So I'm going to drop that in here. Okay. Make sure you guys register for that webinar, even if you have to like watch it on the side while you're working or doing other stuff. But yeah, like things are changing pretty much forever with the platform. So definitely need to make sure that you guys are tapped into that call on the 20th. All right, cool. So yeah, guys, I'll be posting all those links and all the other stuff that you'll need on my channels. So other than that, hope you guys have an amazing rest of your Sunday night. I will see you guys on the sessions throughout the week. And yeah, man, let's crush it this week and make the most out of it. All right. Cool. Well, much love. Appreciate y'all. Hope you have an amazing rest of your night.